Hello. Hi, this is Steffi, and welcome to the Financial Fox, investing and innovation ideas with a twist. Today, we have our weekly focus on smart investing with Clem Chambers and Zach Meir. So I'm very excited actually because there are a lot of questions that I want to ask Clem, and also I want to see and I want to hear from Zach his point of view about what has been happening around the world, the impact that has on the public market, and obviously his take on the company and anything kind of exciting. Here we are. Zach has just joined. And that's great.
I'm very concerned the conversation might dry up.
No, Zach. I was just making an introduction saying that, today we were going to talk about exciting things on the market. And I was...
the main challenge here is Clem likes talking and how to get a few words in on the side when Clem is not talking. Or how to say Clem.
Clem hasn't joined yet, so we are.
I've got nothing. I've got nothing to say when Clem's not there. So, I only feel like talking when he's talking.
I would really like to hear from him his take on Afghanistan and the market and where how things are going as well. I mean. In a chat we had a couple of days ago, he said, well, that already happened. So, we can't expect much more reaction from the market, which was actually a point.
Well, no, there's been bad reaction today, but that was the Fed, not the Afghan situation.
Right, here I've got a question, Zach, before we get Clem on. Blue Jay Mining, shoot me.
What do you mean shoot you?
Well, tell me your take. I look at that actually after they announced the big deal with the company.
It's fantastic. I mean, the having a joint venture with Bezos and Gates and the Archangel Gabriel, all those good people. I mean, it's fantastic. I mean, it should be. In fact, I'm surprised the shares haven't gone up double and triple. So how mad the market is now.
But Zach, it's still exploration though. So maybe if you are prepared to hold for many years, then yes, then it's going to be cheap at those prices, but perhaps it's a bit overpriced now. What do you think that's kind of a fair comment?
No, I think the market is so mean these days, and it's something to talk with Clem if he turns up. The market doesn't like the stock market is supposed to be forward looking. These days, the stock market is actually backward looking. And then when you deliver what the market wanted, then it says, oh, we already knew that, so the shares are going up. So it's a bit like with Canadian Overseas Petroleum at the moment. They came back from suspension. They did a deal when the oil price was $39. It's now 65 or 68. The shares are exactly the same prices before they were suspended and before they ramped up their production. So, I mean, the market is very...
Hi, Clem, I'm clicking to join.
Yeah, we are live on YouTube.
I can see.
Okay.
I'm Skyping, you're Zooming.
Okay.
Let's all go.
Okay.
Yeah, I thought I'd start talking because I won't get a chance again.
There is still a runaway.
Well, it's the same share price as it was before the news came out, practically. So it's not really much of a change. I think that. The other point is that now that you have those rich people involved, if the exploration takes a bit longer or, this and that, there's more work to do, they've got deep pockets. So, I think it should be fine. But it was a very, I think the shares were like 10p, 11p beforehand. Now they're 11, 12p. I mean, that's pretty mean. So I suppose the market is just saying, we don't care about the JV with all those rich people. We want to see results, and when we see results, then we might value you properly. So a very cynical market, very tough market.
Okay, and interesting. Clem, is the market cynical?
Well, the market is worried that the Fed and the Bank of England and all those guys are going to pull the plug on printing new money. And, there's a gigantic gaping hole in the finances of the world, let alone the first world. And if they decide to go austerity, oh yes, if that's going to happen, then obviously everything's going to fall into a smoking crater. And they're all going, oh, we're going to taper now this year, whatever that means, how much taper, still printing more money. But the implication is that, the way out of this is going to be suddenly they're going to stop printing new money. And then if that happens, then obviously all the stock markets will just go thump. And alternatively, if they're going to carry on printing, there's going to be runaway inflation and all the commodities will go through the roof. So now they're saying, we're going to taper and we're not going to let inflation explode. Everyone's thinking, well, maybe raw materials aren't going to go to the moon after all. So if you're in the raw material sector, you're being very, very poorly valued. I mean, BHP's got a 10% dividend. I mean, if you have a 10% dividend, normally people say, well, you're going bust, aren't you? And therefore your share price is collapsed. That's a mining company making historic profits. And nobody cares. Nobody wants to know the 10% dividend or the 8% at Rio. Yeah, because they see that there's going to be some sort of economic catastrophe, which is going to lead into some depression, recession. And that will only happen if they stop printing money because they're scared of inflation. And I don't see that happening at all, because basically the way that I look at lots of investments is don't mess with political footballs. Well, you can't not do that at the moment because everything's a blooming political football because they are driving the bus. And I was writing an article, I said the lunatics are driving the bus. And I thought, no, I don't mean lunatics, I mean politicians. There's a synonym there. And so you've got this situation where if you are going to invest alongside the politicians and bureaucrats, because they've got investments, and their investments, generally speaking, are their houses, their real estate. So real estate's going to go nowhere but up if it means anything, and their pensions are going to go nowhere but up. Yeah, and that involves them generating inflation. Otherwise, if there is an economic, a cycle of tightening and austerity, I mean, the whole blooming thing is going to go belly up. And they're not going to want to go belly up. They're not going to want to have their house prices collapse and their pensions turned into ashes. They're going to use inflation to get everything back to normal again. And so therefore, raw materials and commodities are going to go through the roof. But in this world of fake news and pestilential amounts of lying, they're going to go, oh, we're going to tighten. Oh, we're going to be austere. Oh, we're going to not let inflation run away. Because they're not going to say the opposite, are they? So you almost have to not listen to what they say and just look at what they do, and that's going to be creating more inflation.
So Clem, a quick question here. So you said invest alongside what they are doing. Obviously politicians are playing a key role with COVID, pandemic, wear a mask, lockdown and stuff like that. So the big pharma is going to go up as well. So I guess healthcare is also...
My thought is this, is they're in control, right? The elite there's always an elite, and they're always in control, and they always look after their interests first, right? So it doesn't matter if it's the politicians or the mandarins or the heads of departments or the heads of hospitals or anybody in that structure. They're going to look after.
Are you part of the elite, Clem? Are you part of the elite? You look like you're part of the elite.
I'm not part of the elite.
Why not?
I'm not somebody.
Where's knighthood?
I mean,
so Clem changed. Sounds a good ring to it, actually.
Yeah, I know. I tried, but they said no.
500 grand.
Had enough services
500 grand. 500 grand to the Tory party. You're in.
I'm the president of Tory party cricket, mate, and I'm still not going to get anything.
I can't believe it. I mean, he's just an OBE or something. For God's sake, what's wrong with people?
You'd be surprised how much effort you have to put in to get those things. You have to work for the calls for 10 years and give up your whole life
really?
for it. Yeah, afraid so.
Okay,
I do know a few people that have had that pleasure, and I tell you, they've given up.
I thought I might get something on the diversity ticket, but obviously it hasn't happened. I'm not diverse enough. But, I'm working on that.
Yeah, you should diversify a bit more.
Yes, I will. Yes.
So anyway, kill that comment.
Yeah, no, kill that one. Yes.
But my point is that if you look, it doesn't matter what country you're in, if you look at what's in the very best interest of those in power, in the system, in the nomenclature, that is always a good place to put your money, because they will not let that fail. That's the last thing that's going to fail. And if you look at it, most people in the private sector, their main asset is real estate. So when real estate gets in trouble, guess what? Out they come and say, we'll help you buy some. We'll help you lever up real estate even more. Oh yes, we're joining you in buying it. We keep those prices up. Yeah, and it's a touchstone for where you should put your money is where they put their money. Because funnily enough, turkeys don't vote for Christmas.
What about the gold touch for a contrarian investors that try to spot the opportunity where people are not, that is not clear to everybody yet?
Well, I mean, there's two schools of thought. Me, in general, I'm 70% cash at the moment, and I've been feeling pretty silly. I mean, in earlier broadcasts, I said I'm out. Something's going wrong with the market. Something wicked this way comes. And guess what? Last night, here it is. And the market is taking a dump. The Fed is going to cut the taper, and all those insiders who knew that a few weeks ago were moving the market, and my indicators were going, oh. So I'm going, something wrong here. So I got out, and now this is what it is that is causing that, the upcoming taper. Now, however, that's one side of things. So I go, I don't want to be playing in this game, but where can you play? There's always a party going on somewhere. And where's the party? Well, it was cannabis stocks in America, and really the party's still in America. And then it was SPACs, and then it wasn't SPACs. And it's always biotechs, because there's always some biotech that's got a new cure for some terrible disease. And the most awesome part of biotech right now, as far as I'm concerned, and I've got a ton of this now, is in the CRISPR end. Now, CRISPR is a way of changing DNA. It's DNA Lego. And, well, that's just going to be gigantic, isn't it? They say, hey, how would you like to live to 500? Let me edit your DNA. Hey, how would you like to solve all those terrible diseases that you might have inherited? Oh, let me just edit your DNA. It's, it's Promethean. I mean, it's like something that Mary Shelley
would do hair yet? Can you get the hair back? Can you get your hair back?
That's well, I mean, you already got that, isn't it? Isn't it, Rogaine? Come on, you should be on that part.
That's not good enough.
On that train already.
I want the Clem Chambers look. I want the full, fluffy thing.
Exactly, that easy. That's that you have to go to these kind of clinics. They do filler and Botox. They can do your hair as well.
Yeah, that's well. I need I had a big thing on my head before, but it's not there anymore. It's very, very upsetting. But
well, don't they just cut the back of your head and then just shove it forward?
That sort of thing. No, well, but you see, that's why I want the CRISPR thing to work. So it just kills that baldness gene, and I can live for 500 years with the wind blowing in my hair.
Well, about 5 or 6 years ago, I was talking to a journo and I said, well, Tesla's going to be worth 200 billion. It's only worth 20 now, but it's going to be worth 200 billion because these things always are. Now, they always go to 200 billion. They just catch the imagination and off they go into stupid valuations. And I can't play that game, so I'm not buying it. And then 5 years later, he called me up and said, hey, it's 500 billion. You were right. And I said, yeah, I know, but you can't. I can't play that game. Well, I can with DNA editing companies. So I'm just going to load up and leave them for 10 years and see where they end up. There's two that I hold. One is called Edit. Nice. Let's edit my DNA. Yes, please. And the other one's called, funny enough, CRISPR. And CRISPR's worth 10 billion, i.e. peanuts in America. And Edit is worth 4 billion, which is barely even, out of the small cap zone in America. And there's only 4 companies that I can identify as even worth a look in this space. So, that's the sort of place where if you're scared witness like I am about having a decent company, that's the place to go play while you're waiting for the market to get safe.
So just to get you right, it's called CRISPR Therapeutics.
No, it's not CRISPR. No, not Walker's Crisps. It's called CRISPR. That's CRISPR. There's no E in it. But if you type DNA and CRISP or something like that, Google will set you right.
Exactly.
And I've got to say, I have real problems spelling it myself because the ticker is not CRISPR, or it's like CRISPR, but it's similar to that for CRISPR Inc. And Edit is NASDAQ Edit, EDIT. So that's an easy one to remember. I think the company's called Editas. And it might even be Swiss, which is even better. But, you might as well just buy a chunk of each of those and just leave it for 10 years. There's only 4 of them at the moment. And, you know, I mean, how can that not be a massive thing? I mean, the rumors, of which there are all obviously tons of them going around in all these areas, particularly in America, is that obviously a biotech, like, not biotech really, but a pharmaceutical company like Merck or Pfizer will just go, oh yes, we need one of them, snap, you know, 10 billion, chunk change. I can borrow it off the Fed for nothing, no, bang, take it. And, you know, that is something that is obviously quite an interesting idea for the UK, the fact that the Americans are just going to buy everything because it's free. You know, I think GSK's got likelihood of getting bought, frankly. I bought some on that basis. And I think Vodafone is looking a little bit, you know, open for, you know, but being bought up cheap. I mean, somebody like Amazon, in any one of those huge media companies, hey, I want a phone company.
Yeah, true. Because one of the things will be like, as we get into the recession, people don't want to. They just have cash. Companies got cash. The best way to use cash would be to acquire a business.
Yeah, I mean, if you look at the environment right now, interest rates are not going to go up. I mean, if they go up, they're going to go up such a small amount. It's not what us old guys would call interest rates. Yeah, I mean, ooh, wow, base rate is no 2%. How scary is that? Not. Yeah, if you can borrow at 2% money to buy a company paying a 5% dividend, you're making 3% on your money, aren't you? It's carry trade, and you're getting this huge business that's going to be, you know, just waiting to be bought for nothing. I can go, hey bank, I'm a big corporation. Do you want to lend me 50 billion? Yeah, of course you do. Yeah, thanks very much. 2%. Yeah, thanks very much. Boom, I just bought Vodafone. Boom, I just bought GSK. Boom, I just bought anybody I care to buy in the FTSE 100. You know, it's free money. All you got to do is have access to it, and you can buy anything you want. You can buy everything you want. And that's what's going to go on now. Up to like a few weeks ago, oh, you know, gee, I got to go to America, sure, and sit in a hotel for 2 weeks. Oh, wow, I think I'll pass on that, you know. Can't we just ring them up? Oh, no, that's more difficult. Am I going to buy a 50 billion pound company over the telephone? Oh, but, you know, why don't we just wait a few more weeks before we like go over there and kind of sign the deal? So as soon as the US opens up properly, which I think it's already happened or about to happen in a minute, they're just going to get on the plane and just buy everything that's not nailed down. And it's going to be every day someone else gets bought. You know, Megit yesterday, Ultra Electronics the day before. You know, that's just the beginning. That's just the little tremors of an earthquake or takeovers that's going to happen. And, you know, Capita, anything at all, it's all going to get snapped up by Americans. I mean, obviously, European companies, well, might not be so welcome with Brexit and all that. But, you know, the Americans are just going to sweep the decks when they can come in and, you know, stay at the Ritz for a few weeks.
Okay.
So, I mean, my question to you, Clem, is it better just to go for trying to find the next sort of, the next big thing rather than trying to rely on the Fed put or the trend of, you know, money printing?
Well, I think that's a really simple call, which is, I mean, I just cannot get over how much misinformation and misdirection and straight out lies are in the media these days on all fronts at every level. It's just like this huge bag of lying has just exploded and covered everybody.
You sound like Donald Trump now.
Well, I mean, for example, I mean, he's a perfect example. But he's not alone. I mean, just look at the other side. Yeah. I mean, we just had 5 years of constant lying from everybody in America. But it's a new thing. There's always been lying. There's always been misdirection. There's always been fake news. But there's been amplified. So you have to make up your own mind. And the best way to find out whether the Fed is going to do its thing is just watch that S&P chart, which is going up in a straight line. The moment it's not going up in a straight line anymore, that's all over. So that's what I'm watching. So you can go, oh, I'm going to sit here and I'm going to, oh, look at that chart. No, please don't break that trend, please. And that's fair enough if you've got the nerve for that. The other way is to say, right, here's a couple of ideas I like. I want to go to the party. Where's the party? Oh, it's going to be this DNA stuff. So I'm going to play in that little pool. It doesn't matter whether the S&P doubles or halves. That's going to be a thing all on its own, all fine. And then what other ideas? Oh, I like to take an idea. Well, who in the FTSE 100 are going to get taken over? And what do I need to look for to see that that's underway? Because funny enough, there's three sorts of takeovers going on right now. There's the one that you see in the chart, because they're basically saying, we'd like to take you over. And the company goes, sorry, I'm away from my desk or on the phone. Please call back later. I don't want to talk to you. Yeah. The second one is, okay, let's do a deal. Now, if it's private equity, yeah, it's a bit quiet and the price doesn't tend to move so much. And the third one is, yes, you can buy this part of my business that I don't really want, and it will give me a cash pile that I could quite use, and we'll do a quiet deal over it. And actually, it's not really good for the shareholders, but at least it gives me some dry powder if things go wrong. And that third one is like when the company says, yeah, you can buy our, I don't know, our sugar making bit for a good deal, and it's all complicated, it's private equity, and the shareholders don't actually like it. So that's a done. The one where you can see it coming because it's hostile, well, you know, everyone's for sale. So if you see something ticking up for no apparent reason, that's a good one to think about whether there's a takeover there. And then you just got to look around for the obvious ones, where they're actually keeping a lid on it. And, you know, in America, they do keep the lid on their takeovers a lot better than they do in the UK, mainly because if you do insider trade, you go to the pen for 4 or 5 years, whereas in the UK, you might get, you know, caught one time in 30. So, you know, there is leakage on some stocks and there's no leakage on others. And then there's the dud takeover where a private equity, you know, does a stitch up with a public company, and there's nothing in it for the shareholders apart from savings.
Clem, can you explain how do you see or do you spot a company that is ready to be taken over?
Well, first of all, it's cheap. I mean, I actually missed Ultra Electronics because it wasn't cheap. And right now, money's so cheap, companies are actually buying companies that are expensive as well. So that's quite a novelty. Yeah. So if you look at like something like Informa, which has got rumors of it being taken over, it's not cheap. It's quite expensive, but nonetheless, anything's cheap when the money that you pay for it is free. So it depends on your definition of cheap and expensive. But if you look at companies like Vodafone, paying a big old dividend, you know, any company that pays a fat dividend is cheap by definition, because if you put your money in the bank and you get 0.5%, if you're lucky, and you put it in a decent company and get 5, I mean, it's an outrageously good deal. And in the old days, when interest rates were 6%, the dividends that companies were paying were less. Yeah, and it's all about yield at the end of the day. So, you know, people, companies will go, well, I'm a growth company. I am Netflix. Oh, let's buy ITV. We'll have all their back catalogue for 30 years, and we'll make, you know, 50 different channels of funky British television. For what? 4 billion. That's like a, you know, 3 months of their budget for making movies. Oh, actually, it's probably a bit more, but you know what I'm saying. For Netflix to get 4 or 5 billion to buy ITV, it's a no-brainer, and probably it will be a no-brainer very soon. Something like that.
Why hasn't this happened? Why this should have happened like in the last 10 years? As soon as the 2008, 2009, it should have happened then. Why is it taking so long?
Well, I think that this is a different loop. You know, I mean, literally, there's never been a time when money's been so cheap and so plentiful. I mean, they were bailing out lots of companies from an impossible situation in 2008 and trying to repair the banking industry and all that stuff. Oh, the banks are all fixed now, so they got no problem. The only problem they've got is they've had too much cash pushed onto them, and they're having to give it back to the central banks to look after. Yeah, because they've got nobody who will take their money and spend it. Well, if you're going to buy ITV, you're not going to do it over the telephone from New York, are you? You're going to have to go there. Well, you know, that's been very, very difficult and unpleasant thing to do. And that difficulty and unpleasantness is soon going away. And when it goes away, there's going to be an absolute, you know, explosion of American UK takeovers. That's my thesis. I like. But
are you also saying that the differential between the UK valuation and the US valuation is now so wide? It's like, you know, before it might have been 2 to 1 or 3 to 1. Now it's like 10 to 1 or 20 to 1.
Yeah, absolutely.
And so it's just idiotic. Yeah. I mean, it's £4 billion is, you know, 10 years ago, that was like, you know, that was $50 million. But now it's like, you know, it's just completely got, it's just like £400 million now. It's that cheap. It's just really, really.
The differential in valuation between America and the UK is huge. So, you know, the multiples, even for boring industrials, a boring industrial in America is 2 or 3 times more highly valued than the same industrial company in the UK. So you can buy profits at a 66% discount. Why wouldn't you? You know, and then if you go to the funky end, where your the numbers don't even make sense, and you look at companies in the UK which have got technology businesses or media businesses on one-time sales, and there they are in America on 20 times sales, 10 times sales, or 5 times sales. I mean, why wouldn't you buy it? I mean, you'd be mad not to. It's a question of getting the other side to actually agree. And that's the tricky bit, because they might go, oh no, you're vastly undervaluing our business. Just look at how crap you are and how much more valued you are. We don't want to sell out to you for nothing. And righteously so. But if you can actually get them to say yes, and we just have to do this deal for the shareholders because it's 40% more than they get tomorrow, then if you can get them to say that, then why wouldn't you? Because money's free, and money's free.
I get that. It hasn't been a problem though in the past that a lot of British companies, because the management there knew that they wouldn't be able to get a decent, anything like that kind of job afterwards if they were taken over. They'd be kicked out by the Americans. The new management, they'd be out in a heartbeat. They've actually blocked a lot of takeovers, decent takeovers for UK companies. I mean, I remember the Astra situation. I think was 5-7 years ago, whenever it was. I think it was unbelievable that wasn't taken over then by, I can't remember, it was Pfizer, whoever it was. And
there's certainly more than enough to go wrong. And frankly, I wouldn't be surprised if there isn't a company in the FTSE 100 that hasn't already been approached, or several times even, or aren't approached all the time anyway. The point is, are they given a reason to say yes? Or is there a good reason to say yes? And, a lot of, well,
yeah, but if I'm a UK CEO in the FTSE 100 getting 10 million a year, and somebody knocks on the door, there's not much incentive for me. I'm not going to get 10 million a year again in my life, am I?
No. It's Zach. Look, when we take you over, you'll be the CEO of the UK division, because we're going to have to make promises to your government not to wreck you. Okay, and you can have that job for 3 years. And by the way, you quite like this working from home gig, and all your problems will be over, and we'll give you a golden parachute, and we'll make sure that you fly by private jet for the next 3 years. And how about that? Oh, and we'll give you an exit bonus, and we'll give you this, and we'll give you that. Look, because we're talking about 4 or 5 billion here. We don't give a flying anything for 30 or 40 million in your pocket. So we'll look after you, don't you worry. And someone's got to, and who knows, we don't want to be flying around Delta and Lambda and Omega. So you'll be doing all that, and we promise the government we won't wreck you and ship you to Switzerland like we did Cadbury's. So we'll sort you out. And if I didn't say that, you'd say bugger off. So I'm going to say that it's just an extra bit on the bill. It's what we're paying Goldman to do all the paperwork. So why wouldn't we give that to you to make sure you say yes?
So it's all go for takeovers, basically.
I can't see it not being. I mean, it's just like, a lot of the companies in the FTSE 100, as far as I can see, are wrecked anyway. I mean, if you look at their balance sheets, and okay, so you have COVID. COVID comes along, and suddenly they're making the same money. Suddenly they're still turning over the same cash. I mean, how does that happen? What's gone right in the last 18 months that the news is so not terrible? Yeah, I think it's furious accountants. But there's only so much that furiously beavering accountants can do for so long. And now you're seeing people coming out with, oh, no, it's bad now. Well, why wasn't it bad when your whole business was shut down for a year? Why is it taking another year for it to be bad? What happened there then? Where's the offset? Well, it's in the accountants department, isn't it? And even in the best of times, when you look at accountancy, in public listed companies, how many FTSE 100 companies are solvent if you take out their intangibles? Yeah, right, none. Yeah, so that was before COVID struck. So if you're sat on this company relying on intangible assets and accountants furiously beavering away to look even half decent, then why wouldn't you say yes to a takeover to an American company that's got infinite access to capital? British Airways, what sort of pickle are they in? I don't know. I wouldn't even go near an airline, but you would have thought for an industry that hasn't been doing anything for 2 years, if in the old days they'd gone, oh no, our profits are going to be 5% down on the year, their share prices would have halved. Where are they now? I mean, so there's a lot of suspended animation going on in the markets.
It's
So
sort of idiotic. A lot of companies are doing better, have done better in one of the biggest crises ever. It's unbelievable, really, isn't it?
Well, I think it's a good word, unbelievable.
For one reason or the other,
that.
through government grants and this and that and everything else. But the share price is either on recovery hopes or bailouts. They've actually done better in a crisis. It's like that phrase: "Never to let a good crisis go to waste."
You can imagine a board that has been doing so much tirage for the last 2 years suddenly has John Wayne riding up with a big sack of loot, saying, "How about we take you over and you carry on going for 2 or 3 years on a fat salary, and all you got to do is hand over the keys." They're not going to go, "Oh no, we really want to fight through the oncoming 4 or 5 years of complete economic disaster without anybody's help."
What will be the signal that is going to reverse this trend?
Well, which trend's that?
The trends of everybody saying the stock market is going to collapse and it doesn't collapse.
Well, it's great. When everyone's saying it's going to collapse, that's good. That's very, very good. But the media tends to say that anyway. But I mean, the background noise is always good. If everyone's worried and it's not going down, that's good. Because, people, if you're a contrarian, that's normally a good place to be. It's when everybody says it's going up that you've got to start worrying. And when everyone's going, "Oh, it's brilliant, it's all going to go to the moon, it's fantastic, it's amazing, that's when you've got to be worried. But, ultimately, there's a huge disparity between what is obviously the case and how the market is behaving. And the market's behaving like that because the Fed, for example, and the ECB and the Japanese and everybody's uncle is printing money like crazy, and it's going straight into bonds and going straight into financial assets. Yeah. Well, things just can't go up forever, even if they go up a lot forever, because if they keep going up, it's going to be not because the assets are worth more, it's because money will be worth less. So ultimately, one's wealth is what your purchasing power is. So if the market keeps going up, it's because purchasing power of the pound or the currency is going down, which is probably quite bad. Now, if they don't allow for inflation to do that, then prices have to fall because there's a huge gaping valley of debt that's been carved in the last 2 years. And that activity, the economic activity that pays for all that and pays for our modern life, is not there. The deficit between income and outgoings is now very large, and it's not really closing up fast enough for the whole process of printing money to stop. So if they stop printing money, everything's going to go down like a pile of dominoes, and then including the people whose decision it is to print or not print, and their worlds will go with it too. So it's not, in my book, they're not going to stop printing. They're going to talk about it. They're going to say it's happening. They're not printing, but they'll carry on, saving the day by generating more free money to fill in the hole and the liquidity needs of an economy that has got a big deficit. And the inflation that causes will close the gap, because the inflation will close the gap between GDP and debt, or can do anyway, whereas austerity can't. The moment you go into austerity mode, everything collapses and everybody's, eating stale bread and has no money. So that's not going to solve anything. So the only way to solve it is to try to keep the white heat of industry going like they did in the 70s until the GDP catches up with the deficit ratio. And then, who knows what a pint of beer costs.
Do you see that happening next year?
What's happening already? And, now they're just bending the yield curve on bonds to try to make sure the money's going to the right place and not to the wrong place. But, they've done a brilliant job so far, but it only takes a couple of little mistakes and it will be, quite a problem would be caused by such mistakes. But, it's all going to be in the S&P 500 chart. If it keeps doing that in a 45-degree rise angle, then they've got it taped. If it goes sideways, well, okay, they've stopped the printing of money situation. They're not printing too much money now. But will the market put up with that? It's more likely to go, the trend's changed. It's going to crash, and they'll all dash to the exit, and the crash will be self-fulfilling. That's what I think will happen.
Yeah.
It might be today. It might have started, but I don't know. Personally, I've got gold, and the market tells me I'm wrong about gold because he don't like gold. And
I'm telling you wrong about gold as well.
What's that?
And I'm telling you wrong about gold as well. But it's all right. Hope one day Bitcoin will be banned, and you'll be back in the game.
Now, tell me, Zach, what's wrong with gold? Because I need to know.
It's totally defunct. It's been defunct basically since, I suppose, at least 2000. The GFC. But as soon as Bitcoin went over 2000, beat the price of gold, that was it. That's the sort of thing you'd be telling me. It's like you would have said, "Oh, Zach, I remember I was sitting there in my, in Bahamas, and I just saw the price of Bitcoin over $2,000 an ounce, which was more than gold, and that was the watershed moment. Hot air was now officially worth more than gold. That meant that it was the end of gold. And for those who don't buy gold, they go into real estate. I mean, they'd sell their children to buy real estate. So obviously, gold is out the window. I suppose even more now with the COVID thing and the other, sort of the other stuff that we've got. You buy your mansion in the country, and you hide away. You can't hide away with the bar of gold, can you?
Well, I don't disagree. But what I would say is this.
The main problem, I think, also just to finish on that point, the main problem is gold. The gold price is so obviously been fixed to be low versus the dollar, so the dollar just doesn't sort of disappear like the Weimar Republic Deutschmarks or whatever they had at that time. It's basically used as a ballast, inverse ballast, to keep the dollar having any value at all. And that's been the problem. I mean, if gold was not fixed, it'd be $10,000 an ounce now. It's so obviously being fixed, and it's so easy to fix on the COMEX market as well. JP Morgan keeps selling a few hundred contracts a day or whatever they do.
I would say this: you can fix a market for only a limited amount of time. That's history tells me that. Whether I'm right or wrong, that's a theory. The other thing is, go tell Asia and the Chinese and 4 billion people in the world that gold is valueless now, and they will go, "Oh, I like gold. I like gold. I like what I can. I can't carry much of it, but I can carry all my wealth in gold on my wrist because I don't have much wealth, and I like gold, and I trust gold, and I don't have computers. And you people in the first world might think it's a barbaric metal, but I like it, and I particularly like it hanging from my wife's nose, and I like it around my neck, and I love that stuff. And I think there's, the Russians love it, the Indians love it, the Pakistanis love it, everybody in the Middle East loves it, the Chinese love it, the Southeast Asians love it. So I don't think there's any lack of love for gold out there. But what I do think is potentially the reason for it. Nobody gives a monkeys about gold until all of a sudden they'll all give a monkeys about gold. Because right now, if I go to somebody like you and I say, look, why don't you buy some gold? You go, why would I do that when I can jump on a SPAC in the US, or I can run for a DNA stock in the US, or I can trade Tesla? Why would I bother with gold? It's double, big deal. Like, I can double my SPAC in 3 weeks. I'm on Robinhood. Gold, what do I want anything to do with that? I'll put it in Bitcoin. It's all over the place. That's fun. So gold is just too blooming boring right now. And, people still believe that somehow we're going to get deflation. And I'd like to understand how that could ever happen. But at some point, people are going to go, oh, actually, Now, the reason gold fell, and I couldn't work it out. I was going, what? How can Bitcoin and gold go up and suddenly gold go down and Bitcoin go up? Well, it's all those Afghani looting politicians leaving the country and liquidating their gold and putting it in Bitcoin as they head for the airport. It's obvious. Those Afghan people in power there, they've been looting Afghanistan for 10 whole years, and stealing all the aid, and stealing all the uniforms for the policemen and all the blind dogs and anything not nailed down. They've been stealing it for 10 years. America put $1,500 billion into Afghanistan, and all they've got is rubble. Where did that money go? Well, obviously they probably stole a fair amount themselves, but when the Afghans were heading for the airport, They're probably ringing their people in Singapore saying, that gold I've got in there, sell it for Bitcoin, send me the Bitcoin right away. No, I don't care, just sell it. No, sell it now. No, I don't care if it's going to hit the price, just sell it. Because I'm heading to the airport and I do not want to have 55 tons of gold in your safe when I land in America. And they start asking me, how much money did you steal, Mr. Minister or so? The president left $5 million of cash on the tarmac. And don't you think he might have had quite a lot of his money outside the country before he even had to head for the airport? So that's what I think happened. And I wrote it in an article, I think, for Seeking Alpha. I said, something wicked this way comes. Well, it arrived. And that's why gold slumped. Now, if I'm wrong, Bitcoin will stay up and gold will not go up. Yeah. But if I'm right, crypto is going to come down and gold's going to go up.
Wow. Which
proves that Bitcoin will prove, if I'm right, that Bitcoin and crypto is now the asset, the flight asset number one. As I've been saying for years now, if you want to, dash to another country before you get nabbed, you want Bitcoin, you don't want gold bars, because, you can't really carry more than 100 weight of gold, and that's only worth about 3 or 4 million. But you can have 100 million, hanging from your ear in Bitcoin as much as you want. So anyway, that's what I think happened with gold. And I think that for some time to come, people are going to go, well, why would I bother with gold? It's too slow. It's too boring. It doesn't move fast enough. It doesn't move far enough. When I can, trade Tesla and it can pop 20% in a day.
I suppose you're right that if we had a nightmare scenario, then the authorities could just close down Bitcoin like that, or make it illegal to have it, or make it illegal to transfer it, or whatever it is. But they couldn't do the same with gold. So that is ultimately there is, if the financial system collapsed, you would still have your gold bar, and that's what you're saying. I mean, obviously with Bitcoin, you need to have a bank account, you need to have some kind of system infrastructure in place and you need to be somebody has to allow you to transfer the money. Whereas with gold, you just run it, you do a runner. That's it.
The off ramps of crypto are pretty tricky, and I find that is always a worry to me, because you can put a little bit of money into crypto, make a ton of money, and then pulling it out again is quite fraught. Because for a start, your bank's going to ring you up and say, well, where's this come from then? You must be a drug dealer. You go, no, I'm a cryptocurrency dealer. Are you? Yes. Oh, well, we're closing your account. So that is quite tricky. And then, of course, when you go to your off-ramp, be it Coinbase or wherever, or if it was Binance before they got kicked out of the UK on the end of the boot of the FCA, if you're on Coinbase and you want to change your bank, 6 years later and 500 pages of paperwork, they might actually let you do it.
Yeah, so I think that's actually a good point that you raised regarding the Afghanistan situation. Yeah,
well, we'll see, because if crypto falls away now and gold starts to swoop up, you'll know that the selling pressure of gold has gone away, wherever that was coming from. Seemed to be 9 p.m. American time on Sunday. Feels like Asia to me. Opening of Asia time a few days before the balloon goes up. Yeah, and then if you look at Bitcoin, you can see that it seems to be driven by market openings in different parts of the world. And it's not that a load of honest citizens are waking up going, oh, I need to buy some Bitcoin now. Oh, I need to sell some Bitcoin now. No, it's because people with a clear and pressing need to sell gold and or buy Bitcoin are waking up and going, come on, just do it now. And that's a certain tempo there that you can see in the charts.
Clem, I wanted to ask you something regarding the recent update from Robinhood, which was quite interesting to see the Dogecoin accounts for around a third of the crypto trading on the platform. I know that you already share some views on Dogecoin, and I would like you to tell us why Doge and why not Bitcoin?
First of all, I want to say that everyone should pronounce it Doggy, because it's a dog is the logo, and DOG is dog, and EZ, Doggy Coin. But anyway, Doge, which I thought was the king of Venice, but there you go. But anyway, Dogecoin, or Doggy Coin as I prefer to call it, it's all about brand. That's why it's strong. It's got a fantastic brand, and now it's got even a more fantastic brand if you think about it, what are the three brands in crypto? Bitcoin, Ethereum, and Dogecoin. That's it. I mean, there's fantastic stuff out there like Monero, but nobody really cares. That's the three. That's the top three, right? Be in the top three, or you're nowhere at all. And Doge is number 3 after Ethereum and Bitcoin. So it will always be a brand. And when the mainstream enter, which they will one day, you know, they'll go Bitcoin, Ethereum, Doge. And therefore, you know, that's it. That's all you need to know. That's all you needed to know years ago. I actually wrote that saying, again, Forbes, you can just say Clem Chambers, Forbes, Dogecoin. And there you'll see an article where I say, you know, it's a brand. It's such a strong brand. It doesn't matter whether it's a joke. It's a strong brand. And that's all you need for a currency is a strong brand. You know, in the old days, it'd be a Mary Teresa Thaler. They used to make them specially for trade out of silver, or who knows what the quality was. But because it was a brand, the Mary Teresa Thaler, it was international currency. And, you know, it's the same with all trade currencies. It's the same with crypto. It's about your brand, on how reliable or known, how much of a known quantity you are. And Dogecoin is a known quantity. And it's backed by, you know, it's endorsed by Elon Genius Musk, the man who fell to earth. So, I mean, why wouldn't you buy it?
Yeah, and the Ethereum founder now also is backing it. So that's even more interesting.
I don't think that's the case, but I mean, I haven't heard that Vitalik has said that Dogecoin is great, but maybe he did. I don't know. Maybe I missed that one. I know they dumped a load of secondary Doge on him. Shiba Inu. They dumped like $1 billion worth of that into his known Ethereum account on the basis everyone would see it and go, oh, Vitalik likes it. Oh, and up it went.
Well, he joined the board, so he kind of like.
Did he now? Oh,
yeah.
okay, there you go. Well, that's a massive.
I mean, he's not probably doing much there, but it's still an endorsement.
Oh, it's a massive endorsement. Absolutely massive endorsement, because, you know, it's where all the geniuses are, crypto. And you know, crypto is you know, all the, you know, the level of coding genius and design in crypto is just absolutely the tip of the spear of what's going on in software. And they're all the really super bright people attracted there. And why wouldn't they be? Because, you know, it's the well of eternal wealth all bubbling up for anybody to put their bucket into who's brave enough, you know. But there's brilliant people like, well, it's obviously attracted Musk in because he's brilliant elsewhere, but, you know, like Vitalik, there's a really incredibly deep bench of talent in crypto.
Okay, well, let's see what's gonna happen. I'm curious to see if your prediction are right. That will be really interesting.
Well, it's just like you've got to realize that things happen in the market before you know why.
Yeah.
And, you know, if they happen, you know, blah, 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 blah. Somebody said, oh, no, that's not what causes things. Big things cause things to happen in the market. But by the time you know about them, they've happened. So you can't trade the news. Yeah, that's why price goes down on news and goes up on rumor. Or just goes up and everyone invents rumors for why they're going up. Yeah, but when it actually comes out, well, it's happened. The market is already adjusted. So it's very, very, very difficult to trade on news like that, because before you know what's happened, before you're told, it happened a week ago.
Yeah.
And so you have to guess, have theories about what happens next, and try to be at least a little bit right.
Yeah.
Rather than try to follow what's happened. And
also because Bitcoin is so volatile, that kind of movement of money from gold to Bitcoin, it just goes like, it's not very noticeable. This is what I'm trying to say. It's kind of like, well, Bitcoin is volatile anyway, it goes up and down. So, you know. It's very noisy, very, very, very noisy. And there's a lot of people playing silly buggers in that market. And there's a lot of, you know, a lot of buyers beware. And there's a lot of money to be made, and there's a lot of mistakes and losses to be had. But on balance, it's a very lucrative place to be if you're on your toes. But, you know, unless you're really, really risk hungry, take a few punches to the temple, it's really not a game you should play. Zach, we left you without words.
No, well, no, I think the crypto thing is yet to unfold, and it will be unfolding, I think, probably. I suppose I think this year is going to be the year. We'll probably find out one way or the other how it's going to sort of diverge. We've had the pandemic, and we'll see how whether it sort of comes of age or whether it remains on the sidelines. Hopefully, it will come of age and become mainstream, which is what I'd like. But that's how we go. But I think every time Clem talk about that, etc., and tapering, I can't get a word in edgeways. But I think that the problem is there's no way they can do anything on the tapering front at all. We have to go for an inflationary sort of Armageddon, and that's what we're heading for. So I think I sort of agree with Clem on that. And I suppose that makes any dip that you have in the stock market on tapering talk an opportunity to buy, like we're having at the moment. So that's an optimistic message. Well, really, there's no way they can let stock market fall more than 2 or 3% in any short period of time. It's just got to go. It's got to go through the roof. And I think if there is inflation coming back, that's also good for the stock market too. Allows greater margins for sort of consumer goods and stuff like that, the profiteering, and so it's actually it's all looking quite good, really, in that way. Whether Clem would disagree, but that's.
I think you've got to be prepared to see that there could be just a crash, because everybody could just run to the exit and cause an artificial one. So or a correction, 10, 15, 20, 25%. It's possible because things are so fragile. Long term, medium term, I very much agree with Zach that buying the dip is definitely a thing to do here, but I think you need to maybe benchmark that dip to be quite big, and the market's still not reacting in an old-fashioned way. So when there's bad news, stocks used to drop 35%.
Exactly.
They're still not dropping more than 7 or 8. So it's still kind of broken. So it's very hard to navigate a broken market because the market's not free anymore. So it's very difficult. But I think long term.
Yeah, but that's the same everywhere. I think that's a product of being more informed. And so it's just like with the housing market. People know now, even there's a pandemic, there's a nuclear war, there's a this or that. Even there's no, they're out of work. They're not going to sell that house, and they're not going to put the price down. And so that's what you've sort of got with a lot of assets. You've got these really dogged holders. Somebody bring the dog thing in again, but really dogged holders who, basically, that you should never get out of the house. You should never sell your dividend paying stock. There are things now that that you should never do. You never get out of your gold as well, I suppose. So there are things like that with hard assets now, and the stock market is becoming a harder asset. You should never get out. So you don't have that volatility in the market that you used to have. And that makes it much more difficult for a crash to happen. And let's say tomorrow Iran invades Afghanistan. Do you really think that's going to give us more than a 5% fall in the market? No, it won't.
No, I agree that won't. I think it's more everybody running for the exit at once that would cause that. But what I'm saying is I agree with you. I think medium to long term, the market's got a long way to go up, particularly in the UK. But little dips. But it's all down to that S&P 500 chart. That is telling you the future. And when it breaks out of that incredibly straight line trend, then you've got to be very, very careful. I think it's kind of already happened, in the sense that I think we've seen the top, or we are at the top or near the top of the US market, and therefore that makes things really, really fragile. But the only time ever to get out of the market is if you think it's going to crash, and I think there's a high probability of that. But in the medium term, if it crashes, it'll just repeat what happened in 2020, which is they step in and they just turn those printing presses back on and pump it into the markets, and up it will go again. But it won't stop that vertical drop. And you don't want to be in it, because if you can miss that, then there's a huge amount of money to be made by getting in after it's happened and not being there when it happened. And, that's where I'm sat, and I can miss a lot of upside doing that. And as we will see whether I'm right or wrong. But, I'm kind of sated at the moment with the last 18 months of success. I feel like I need to pick my winnings off the blackjack table and head out the casino.
Yeah. Okay, well, Clem, thank you so much. Zach, that was great. And I think we got some really interesting ideas for people to go and check out. I'm going to check out this editing gene.
CRISPR and edit. I'm there.
Yeah.
And then watch out for the gold rebounds. I think these are kind of,
well, it will drift. It won't do that. It'll just drift up, because who knows how many other people are trying to get their gold into Bitcoin in that zone.
Yeah. Okay. Well, thank you so much. And
Thank you. Thanks,